Duolingo just reported earnings. The stock is down 20% in the after hours. This is absolutely insane. I've seen a lot of coverage of the stock on X of people confused. Like the report was actually amazing. But why is Duolingo down 20%? Well, this could be somewhat normal because now in this market there's a lot of stocks reporting good earnings, including some of my stocks, and they're going down 5 or 6 or 7% on no news, but it didn't go down 20%. I believe there's a reason why Duolingo is down 20% so far in the after hours. I'm going to talk about this reason and give you an update and my fair value on the stock. So I really hope you enjoy it as always. And you guys have been asking me about the stock from 370 and I told you it was too hyped up. I said my fair value on the base case scenario is somewhere around 290. Now it's trading at 200. So this is going to be very, very interesting. But in terms of the report itself, it was absolutely amazing. They grew daily active users 36%, monthly active users 20%, paid subscribers 34%, and the paid subscriber penetration, which is as a percentage of monthly active users, has increased by 0.5%. This is a big deal because 135 million people use the platform every month, but only 11.5 million of them are on a paid subscription. The rest are on a free subscription where they pretty much advertise to them, but they can still use the application. And everything else was pretty much really good with the company. I have nothing bad to say about it. And they said we are one of the few companies that has found a way to make a profit off of AI. This is actually a profitable thing for us. And all those things sound amazing. You look at the trend. The trend has been amazing also in terms of revenue growth every single quarter. So the question is, why is Duolingo going down? Well, when I analyzed Duolingo, I told you guys that there's going to come a point where the company is going to hit a growth wall because of the niche they are in, which is mainly in languages. That's why they're trying to expand, but now they're in languages. They have 135 million. Out of 135, only 11 million are paid. So there's really not much to go with that, and they could still expand it. I mean, there's over 3 or 4 or 7 billion people on Earth, and a lot of people want to learn new things and they want to do certain things. So they have a very large total addressable market. So I said they're ultimately going to hit a growth wall, but I don't believe it's going to be anytime soon. Now, based on the company's guidance, the market believes that the growth wall could potentially be here. Because if you look at their latest guidance for Q4, it's pretty much the same revenue number as of Q3. It's like 1% quarter-on-quarter growth. This is a massive deceleration, guys, from the previous quarters. Duolingo was growing at an average of 38% quarter-on-quarter. They just keep on going. Well, now, this quarter guidance is pretty much 1% growth. So maybe the market is thinking that Duolingo is hitting the growth wall and there's nothing they can do after Q4 and it's going to be downhill from there where they potentially decline. Now, this is too early to tell. I've seen many times companies like Meta and Amazon, they don't grow on the cloud or they don't grow in members and people say, oh, the company has peaked, it's too mature, it has peaked. But then it's just a one-off and then the next quarter after that it gets better and better and better. But this is concerning. We look at another trend, which is mainly, you could say, is the quarter-on-quarter growth for you could say the first one is monthly active users. It has declined from 39% growth, 36%, 32%. Now it's at 19% quarter-on-quarter in terms of monthly active users. We look at the daily active users, it has declined from 59%, 39%, now it's at 35%. So all the gross numbers quarter-on-quarter sequentially, they have been declining. And this is a concern for Duolingo. And by the way, I'm using fiscal.ai to come up with those charts because no other company has such charts. If you want to try it out, they give you 2 weeks of free access if you use my link into the description. But I believe a lot of the things that I talked about here in terms of a potential growth wall, which is concerning. Now, I'm not saying how that is going to happen because, again, their TAM is huge and they're expanding into chess and into many different games. So I don't see how that's going to happen right now. It just feels too early for me. So if I have to bet, I would bet on the growth reaccelerating after Q4. This is just a one-off due to certain reasons, and it's going to get better from here. This is what I would bet if I had to bet on it. Now, in terms of my valuation model, I'm taking an extremely conservative valuation model. In my previous video, I put up 30% for 2026 and 25, 2020, and I used 30 PE. I got $582 per share upside potential over the next 5 years. And this one, I'm going to be even more conservative, and I'm going to use 30%, 25, 20, 15, 15 to account for a potential deceleration in earnings per share growth. Although the company could be much more profitable than it is, they have insane gross margins. So if they want to really expand profitability, they can do it. And I believe that will likely be conservative. The current PE ratio is actually around 30 times earnings as of the sell-off, around 30 times. I took it down to 25 times earnings, as I believe the company will have much higher margins in the future. It will likely trade between 20 to 25 times earnings, maybe on a low case scenario. So this is a very conservative valuation model using everything I showed you, which is a massive deceleration from 60% growth to 30, 25 to 15 and 25 PE. I'm getting 114% on the upside, or $428 per share over the next 5 years, which would be a double or around 16.4% annual return over the next 5 years. So to me, Duolingo over here is looking very interesting. It's looking too cheap to ignore, I would say, in terms of the worst case scenario on the company. Now, in terms of the investment in general, quarter on quarter of only 1% is concerning. Normally, what I would do is I would wait another quarter and see if this is sustainable. So if maybe Q1 was also flat, that's a concern. Then I would maybe not even enter Duolingo, or maybe I would look into doing something about it if I have a position. But if, let's say, the quarter after that came in much better and the stock went up 20%, then I don't really care, because I'm more focused on entering the right growth trend than trying to catch the bottom or do certain things. So this is what I do whenever I look at a quarter on quarter flattish or decline. I want to wait one more quarter, see how that looks like. If it's looking better, then okay, maybe it's time to enter. If it looks bad, maybe another flat quarter, then maybe Duolingo is peaking now. Although I'm not seeing it, but it's possible. And if you keep an open mind, you're going to see it. But to me, it looks like a good opportunity. Not much has changed from the past, except that quarter guidance. But the company, again, is known for being conservative, and they beat on it. But that's really my opinion on Duolingo. I think the sell-off is overblown. It's not deserved. And I'm not sure how long that's going to last. But I hope you enjoyed it. It was not financial advice. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.